The total cryptocurrency market by the year 2032 could be $100 trillion. Yes, $100 trillion. That's a 50x from where it is right now. The current market cap, $2.5 trillion. Is it such an unrealistic prediction? Is it so crazy? Well, if you think so, let me walk you through the reasons why it can happen based on some realistic projections from where crypto is right now. Of course, nothing is for certain, nothing ever can be, but it is a plausible thesis. And if you want to profit from what's coming, then you need to understand exactly why crypto is set for such a potentially huge growth path. And even if we get a third of the way there, things are going to go up massively. Okay. So let's talk about ETFs and institutional allocations first. First up, we have the clearest immediate shift, which we can be sum up as basically ETFs and institutions. And this is kind of a double catalyst. You see, the ETFs provide very easy and secure traditional finance ways to get exposure to crypto. But also, they create a perception change as you've basically got Larry BlackRock frickin' Fink, man, indicating unequivocally to the boomer class and all kinds of more conservative investors that crypto is now a legitimate asset class and it's okay, the water's fine, jump on in. If it's good enough for Larry Fink, it's good enough for you and your grandpa. In fact, just this month, Fink was on CNBC explaining that having once been a Bitcoin skeptic himself, he now realizes in his own words, my opinion 5 years ago was wrong. He calls BTC digital gold and directly states it's a legitimate financial instrument. Going on even to mention Bitcoin's utility when countries are debasing their currencies, a core selling point for Bitcoin and a major crypto talking point. Larry has been orange-pilled and he's orange-pilling people like him. And all of that coming through such mainstream channels linked up with the biggest names in traditional finance is a really big deal. And what's more, Wall Street crypto funds are only just getting started. Think about it. The Bitcoin ETFs have only been active for half a year. Ethereum ETFs haven't even launched yet, or at least at the time of recording this video, they hadn't. So what will the crypto ETF landscape look like in 5 years or a decade? You're not bullish enough. Look, exciting times for sure. It means we also have another major key driver towards higher market caps, the institutional bid and their trillions of dollars of money, which means big sums entering into the equation. This was boldly summed up by ARK Invest founder and CEO Cathie Wood earlier this year when she made an eye-catching $3.8 million per Bitcoin price prediction that she backed up by saying, we put our bull case for Bitcoin at $1.5 million. If institutional investors were to allocate a little more than 5% of their portfolios to Bitcoin, though, that alone would add $2.3 million to the projection that I just gave you. Crazy. Cathie didn't put a time frame on that prediction, but thanks in part to those ETFs, what kind of widespread portfolio allocation can become possible or even plausible? Well, you got to pump the numbers up essentially. And if it happened, you'd be looking at an $80 trillion market cap for Bitcoin alone. Just Bitcoin, not even taking into account the rest of the cryptocurrency markets. Now, we'll move on to another important forecast in a moment here. But before that, I wanted to let you know about the Wealth Mastery newsletter. This is your weekly guide to the cryptocurrency markets. Our readers love it. I'm sure you will too. And here's the reason why. Because every week, my team of researchers and I, we are putting in the work for you, not just to help you stay ahead of the curve, but also to help you save your time by finding the latest and the greatest insights on altcoins, meme coins, DeFi, airdrops, charts, and much more. You can join our 135,000 plus weekly readers for free, link in the description or the pinned comment over on X. Now let's get out some charts. Let's talk about the Fibonacci, okay? So let's pick up on another big prediction, this time from Real Vision CEO and co-founder Raoul Pal, who earlier this year said about crypto, the overall market cap could reach $10 to $15 trillion by the end of this cycle, ultimately surging to $100 trillion, marking the largest and fastest wealth accumulation in human history. Think about that. His time frame is by around 2032, and he's extrapolating that current rates of growth will continue. But is that kind of expansion really possible? Or is this all just a bit too much hitting the hopium bong? Well, one way to get a hint is by looking at the Fibonacci extensions for crypto cycles up to 2032. We'll work from an assumption that the 4-year cycle broadly continues. So there are bull market peaks in 2025 and 2029 and in 2033. The Fibonacci extensions starting from 2015 give us new total market cap highs at the previous cycle's 4.236 extension and bear market resets down at the previous 0% line. And if that pattern were to hold, then we get a total cryptocurrency market cap of around $10 trillion at the end of 2025. We've talked about that prediction many times here, around 34 trillion in 2029. And that would then project forward to around 110 trillion in 2033. Crazy, right? BlackRock, of course, they're seeing this. They know. And that's why they want to bring the world on chain, which is the next factor that we want to talk about. So time to talk about Larry again. We already said that with BlackRock's Bitcoin ETF, he's legitimizing cryptocurrency for a new cohort of investors, including institutions. But Larry Fink's bullishness on crypto actually goes well beyond that, as he's spoken in multiple interviews about tokenization as the future of finance. Imagine literally bringing real estate, bonds, everything on chain, trillions of collateral. Now, speaking at the New York Times Dealbook Summit, Fink said on stage, the technology is going to be very important. The next generation for markets, the next generation for securities will be the tokenization of securities. He then talks about distributed ledgers, instant settlement. He wants to remove the clearinghouses, guys. He wants BlackRock to be at the center of all this too, just so you understand. And he talks about changing the whole financial ecosystem. One of the most powerful men in the world gets it and has a big vision for crypto technology, and they're using public networks to do it. Back in January, Fink also said the Bitcoin ETFs are step one in the technological revolution in the financial markets, after which step two is going to be the tokenization of every financial asset. And if you think Larry Fink, the BlackRock CEO of BlackRock, one of the most powerful men of the world, isn't going to get it, guys, come on. The tokenization of every financial asset. Come on. Are you hearing it? Is it coming through? Again, BlackRock here, okay? The ball is already in motion. They're already doing it. The firm this year launched a tokenized treasury fund called BIDL, built on Ethereum. And since going live, it's already achieved a value above $500 million, while the tokenized treasuries market as a whole is currently approaching around $2 billion in value. They just made an announcement with partnering up with MakerDAO this week too. Big things are happening. Now let's talk about artificial intelligence. See, because crypto isn't the only game in town. Blockchains, it's a revolutionary technology, but there's other things like AI that's going to change the world in a big way. So what happens when you put crypto and AI together? Well, according to Real Vision crypto analyst Jamie Coots, smart contract platforms, so we're talking about blockchains like Ethereum, Solana, Avalanche, etc., and the products built on top of them could reach an aggregate value between $15 and $25 trillion by 2030. But a driving factor of this growth, of course, will be artificial intelligence, as increases every day. And the use of AI leads to more demand for identity verification solutions, a task, for example, which blockchains are ideally suited for. And also, if we have autonomous AI agents working online for us, they may be transacting through crypto and smart contracts. As according to Jamie, by 2030, AI agents could comprise over 40% of total daily active users. And that's not even counting for stuff like decentralized GPU networks to make crypto models more honest, right? Less censorship susceptible, let's say. And that prediction is also a reminder of just how rapidly our tech, our transactions, our media, our lifestyles, our ways of working, in fact, pretty much everything are changing right now. We are potentially in some kind of all-encompassing explosive tech trend that ties in neatly, of course, with the idea of the fourth turning, a cycle theory proposing that society undergoes radical changes roughly every 80 years, in which are due to culminate by the early 2030s this time around. Put it all together, okay? And the result may be global advances comparable to the changes that took place as a result of the Industrial Revolution 2 centuries ago, and you're here for it. You get to invest in that. One of the most fundamentally paradigm-shifting events of our generation. Most major upheavals like that, of course, can create and transfer huge wealth in big ways, and we might be about to participate in that kind of seismic shift. So make sure you're logged in, make sure you're paying attention, make sure you're ready, okay? 4 billion crypto users, ultimately, that's the goal. That's what crypto needs in order to really say mainstream adoptions here. And in that case, we can return again to some handy projections from Raoul Pal. He described the regular rolling over of government debt, which is serviced by increasing liquidity, which causes currency debasement, and in the process maintains the 4-year business cycle. And don't forget, of course, Larry Fink stated publicly that Bitcoin is a top asset to protect against all that debasement, right? Through this process, assets go up as the currency they're priced in loses value, and crypto can be especially volatile because it's a novel technology. It's a new asset class and a novel type of asset. And it's currently following the kind of growth trend that we last saw when the internet was in its early adoption phases. And in fact, we can compare those two. So let's do that. So crypto and the internet. And we can see that active wallet addresses are actually rising more quickly than IP addresses did at this stage in the internet's lifetime. And if we then project that trend out, it gives us an adoption curve resulting in 4 billion crypto users by the year 2030, higher than the number of internet users in 2006, and a number that can take the crypto market cap to that $100 trillion mark once again. Again, imagine 1 in 2 people in the world own and use crypto. Come on. Look, those are big numbers and they can sound overwhelming, but that's all good. Even if it takes longer to play out and these expectations are too immediately bullish, it doesn't happen until 2040 or something, you've still got space for expansion anyway. The markets are going to go up. And that means more and more people are realizing that they don't want to be caught offside by what's unfolding. They want to be involved, and that fuels more hype and more growth. Food for thought. I hope anyway. Thanks for watching.